All right, so I wanted to do one last video about Clove before this week gets kicked off. We got earnings week this week on Monday. That's what everyone's excited about, and all these options, coming into the money. Hopefully, the options chain is loaded up for May 21st, which is Friday. We're hoping for a gamma squeeze. That's what this play was all about. But I wanted to make this video about what to expect this week and kind of start off with what happened last week. So last week we started off with a market drawdown on Monday that pretty much lasted all the way through Thursday afternoon. And we saw Clove drop more than $1, then rebound on Friday, a little bit on Thursday, but mostly on Friday with some resistance levels at $7.50, more around the 770 range. And that 770 to 750 resistance was expected because of the option strike at 750, right? So as we go through this, every strike price is going to be huge. As we get past 750, now the next target's going to be 9, and then the next target's going to be 10. And when we reach all those targets, you're going to see resistance from the opposition. Okay. Look at this options chain. Nothing really changed, but the only thing that I really noticed was 3,000 more calls here and 3,000 more calls here at the 750 price and the $9 price. I don't think that was, any big players or anything like that. I think that was probably retail people that were starting to get on when this thing started to dip. But that's going to end up adding more fuel for this gamma squeeze if it actually takes off. Because, like I mentioned before, every time something gets in the money, those options need to be hedged. And now that starts buying, right? And then that starts upward pressure. So earnings. I've been trying to look around and read and see whatever I can to see if there's any sort of hints about what's going to happen. The company hasn't released much regarding earnings, and but most analysts, what I noticed, have the company price target somewhere around $12 to $15. I saw one at 10, but the median seems to be about $13 range. And that really makes this stock super undervalued, sitting at about, what did it close at? 765 in the after market. I know it closed at 747, but in after hours on Friday, it ran up a little bit more. But still, super undervalued if those analyst price targets are actually correct. So, if we get good earnings this week, that could justify or even increase those price targets. We should see some institutional or retail buy-in, which will help us push that price higher. That being said, and I know I mentioned it in the last video, earnings itself could serve as the catalyst. There's been times where earnings are off or negative and the stock still swings up because that's what the market wants. So we just got to wait and see in terms of that. Me personally, I'm expecting good earnings, but what are we going to expect on Monday or this week? Okay, I can see this going a couple different ways. The first way, earnings are bad. At that point, the gamma squeeze, in order for it to happen, we need like huge retail support. And I'm talking, where this becomes like a meme stock. It's getting hyped on Reddit, social media, everywhere else, and we're getting all this market sentiment. I haven't really noticed any of that over the weekend. So I wouldn't really expect that if we have bad earnings. I don't think we're going to get that push we need. But like I said before, I'm expecting good earnings. So, and I'm becoming even more bullish now that I'm starting to kind of connect the dots or what I think may be connecting the dots. So first off, we had someone, let's just call him a whale, right? We don't know, but somebody or some people came in and absolutely loaded this option chain up almost a month ago. And at the time, earnings were supposed to be in June, but this option chain got loaded up for May 21st. Why? Well, no one knows what's significant about the May 21st date. At the time, there wasn't anything significant about it. But then the company comes in and announces they're going to report earnings early. And then they move it up even further and they say we're going to do it Monday morning, the week of all this stuff expiring. So that kind of makes me feel like, I don't want to be like a conspiracy theorist or anything like that, but it makes me feel like whoever this big whale or whoever this person that loaded up this option chain or people who loaded up the option chain, they almost knew that the company was going to move the earnings up, or they knew that the company's going to be reporting good earnings. That's what I'm kind of banking on. It just seems too coincidental that the time frame and how all this lined up. Hopefully I'm right. But before we get into what I think is actually going to happen on Monday, I want to talk just a little bit more about who I think we're up against. I mentioned in my previous video that we're up against market makers or naked option riders and shorts. So active shorters, people who have an open position in the stock, obviously they've seen this option chain. They see how loaded up it is for the May 21st strike. And obviously they want to keep the price suppressed and moving lower. So they're going to keep hitting it and trying to short it and, hit it with everything they have to keep it down at least this week so that they don't get caught, in this gamma squeeze. But in terms of the actual market makers or naked riders, they're on the hook huge if this strike, as each one of these strike prices hit. So, when the 750 call went in the money in after hours, and if it stays in the money, that's 9,000 options. That's not a ton, but now if we get to the 9, that's 20,000 options. If we get to the 10, that's 64,000 options. And I'm not assuming that all of these are ridden naked, but given the size of the float, I would imagine most of them are. And what I mean by naked is this. If somebody like me or you or anybody else, retail, if we want to sell calls, we actually have to do them covered. And what that means is we need to own the underlying shares. So if I want to sell somebody an options contract at the $10 strike for CLOVE, I need to have 100 shares to back that up. That way, if the $10 strike hits, someone can buy those shares from me. Now, market maker or big institutions, they get the opportunity to actually write these calls naked, meaning that they don't own the underlying shares. They think they're selling you this option and it's never going to hit. They're just going to collect that premium. And at the end of the day, they just got free money, right? But as these options get into the money, and we talked about this before with this delta hedging, now they need to start accumulating shares. So when it goes from 0.4, which was 40%, now they need to own 40 shares for every call they've written. As it moves up to 0.6, now they need to buy 20 more shares for every option they've written. As it moves to 0.7, now they need to buy 10 more shares. It moves to 0.8, 10 more shares. And then eventually it'll get to 100 or 1.0, now they need to own all 100 shares. So they significantly want to keep this price suppressed so that doesn't happen. And I would imagine that the majority of these calls, not all of them, but the majority of them were written naked just because of the overall size of the float. I mean, if you look at the open interest on this thing, there's almost more calls or just as many calls as the float itself. So in order for them to all be written covered, that means that everybody who owns shares, is the ones that wrote those calls. And that's just not, that's just not the way it is. So, these naked riders, these market makers, they have the means to suppress the price. They have the money behind it to do it. They wrote all these call contracts. They made a bet by selling these call contracts, and they're going to do whatever they can by either shorting the stock themselves, putting up sell walls, things like that, to keep that stock down. Okay, so that's what we're up against, right? But that to me, that doesn't matter because I think we have a whale on our side as well. So 2 scenarios that I think are more likely to happen. The first scenario, which would be absolutely amazing, earnings are great, price skyrockets right when it's announced. I think earnings are at, I'm on the West Coast, so the earnings call right now says it's at 5:30 a.m. West Coast time, so that would be 8:30 if you're on the East Coast. Sometimes, even though they say the earnings calls at 5:30, you'll see the actual report come out a little bit earlier. I'm going to be watching at 4 a.m. my time because a lot of times that's when those things come out just to see what happens. But regardless, when the information comes out, best case scenario, earnings are great and the price is just going to shoot up, right? And it's going to continue to push up, push up, push up. We're going to see increase in volume, and we're going to move past some of these key numbers like $9, $10, $11 in pre-market. Volume's going to increase. People are going to start seeing it and just pile on, and we're going to get our gamma squeeze with a little bit of a short squeeze on Monday. That would be absolutely amazing. I think that's one scenario, but the second scenario, which I think is more likely, is we're going to see great earnings, but right when those earnings come out, so whether it be at 4 a.m. or 5:30 a.m., as soon as they come out, you're going to see this stock get hit hard by market makers and shorts. They're going to blast the stock immediately. They're going to send it down big on that first 5-minute candle, maybe even 5%, 10%, and just try to push it down. And why are they going to do this? They're going to throw everything they have at it to try to scare people into selling, to try to scare people right then to say, oh man, earnings were bad, before they even get a chance to actually, acknowledge what happened in the report and just cut your stock, right? So I think that's more than likely what's going to happen. But then, so we'll see this drop in that first 5 minute candle. But then as the pre-market wears on, we get closer to the open. The earnings call finishes up around 5:36, 6 a.m. Market opens at 6:30 a.m. Others are going to start seeing the earnings, realize how undervalued the stock is. So as soon as it gets slammed down, we're going to see it slowly start creeping up. And we're going to slowly start seeing volume increase. And so whatever that price that it gets pushed down to, maybe down to $7, maybe a little bit lower, but it'll start creeping up, creeping up, creeping up. And by the time the market opens, we're going to see a lot of volume, and we're going to see this thing get back above 760, maybe even above 8, maybe even in the 850 range. And now on Monday, you're going to see people start jumping on, institutions start buying in, people that say, wow, CLOVE is really undervalued. This earnings report was great. And maybe we get to push to like the $9, $10 range by close on Monday. Okay? If this happens, the gamma squeeze isn't over. I don't want you to think like, okay, well, we got in on, we got into it at, the end of the day is $9 to $10 at the close on Monday, and oh, it's over. Well, no, what I think is going to happen if we get to that, that's still a good thing. It just means that our long whales, our people that loaded up the option chain, haven't necessarily piled in yet to really jump in and push this price. So we're getting it up there, right? Now we're at 9, we're at 10. Then maybe on Tuesday we see a little bit more increase, or maybe even a little bit of consolidation somewhere in there. But now Wednesday they choose to strike and push it past that 1250 mark, which should really kick things off. And really, like we talked about, we start passing the 1250 mark has 50,000, open interest on it. And then the 14 has 16,000. Then we get to the 15 has 16,000. So, and these things just start pushing up and we get that upward pressure. So regardless, if we close under 9 on Monday with low volume, I think it's going to be tough to make this happen. That can happen a couple different ways. One, the price could maybe get suppressed. Two, bad earnings, but I think we probably need to make sure we're above 9 to keep our hopes alive for the rest of the week. Like I said, scenario 1, this thing just explodes and it happens on Monday. Scenario 2, if we finish above 9 or 10, we're still in great shape. And I just think that we're going to wait to get that push until, maybe Tuesday or Wednesday. Either one would be great. We have until Friday to make it happen. The real key is the strike prices, right? Because there's not somebody sitting behind a desk actually, hedging these calls and saying, okay, the price just went up. I got to buy more shares. The price just went up. I got to buy more shares. This is all done through algorithms that tell the computer when to buy and sell. So when we're trading above 750, now the computer needs to buy a little more. Then we get to 8 and all of a sudden the delta goes up, the computer buys more. And it works in opposite direction too, right? So when the price drops, when they're able to short that thing and get it down, now the algorithms are going to start dumping shares, which is going to give us lower pressure. So the strike prices are key. Every single strike price, we're above 750 right now. If we open up above 750 on Monday, tomorrow morning, that would be great. If we open up above 9 or 10, that's going to be even better. And then every single strike price, I imagine there's going to be a battle at, unless this thing really just pushes, tomorrow morning before the open. In conclusion, at the end of the day, we're going to need high volume days. Or just day. It could happen on Monday. But we're looking at a really undervalued stock with super high open interest and high short percentage. Is it still a potential squeeze play? Absolutely. We just need to tomorrow's going to be really telling. In terms of when to sell, that's a tough one, right? I don't want to tell anyone when to not take profits. If we get up to like 9 or 10 on Monday, I'm not selling. To me, I'm going to stick around and see what happens as we get into Wednesday and look for that push above 1250. If we're under 9 on Monday, I might consider it. And then in terms of like if this thing really kicks off and starts blowing up, it has the potential to go over 30, in my opinion, if the gamma squeeze actually does kick off. I'll be holding to see if that happens. But again, it's all part of, if you're sitting there watching the charts and you start seeing volume drop off or like, extreme downward pressure, maybe it's going to be time to get out a little bit earlier. And that's all up to, each and every one of you. I can't help you make that decision. All right, I hope you enjoyed the video. I hope you're enjoying all these videos. If you are, leave a comment, subscribe, and I'll keep them coming. All right, have a good luck this week. Have a great week. Sleep well tonight. I'll be up at 4 in the morning tomorrow waiting to see what happens with this earnings.